Regarding my last video about people like Jared and Silver Goldman libeling me. Remember that old, was it Biggie, the notorious B.I.G.? The more money we have, the more problems we see. Not so much the more money I have, it's not about money. But the more my YouTube channel grows, the more popular I get on YouTube, the more problems I see. The more people coming out trying to attack you, attack your character. Man, it's getting deep. But it comes with the territory, right? It's like when people become famous, movie stars, paparazzis around you, you will never be alone the rest of your life. They're going to be everywhere you go, right? Comes with the territory. And I'm learning, now that my YouTube channel is growing and growing and growing pretty rapidly these days, that I'm starting to see certain things that I don't know I'll ever get away from. There will always be shills, there will always be trolls, etc. You just can't get away from it. You make one mistake and they're drooling. One little thing, let's catch them. He said that. He said that. Oh no, he didn't say that. Let's pretend he did. Let's go after him. Unbelievable. Zero Hedge has an article. Seems like you and I aren't the only ones interested in the cryptocurrency world, especially the ICOs or initial coin offerings. Bankers ditch 7-figure salaries to climb aboard the ICO Rocketship. Excuse me? In just a few short months, companies, many of dubious legitimacy, have raised more than $1 billion through ICOs, some of the better hyped offerings in the field of 900 new coins that have been created this year managed to raise tens of millions of dollars in minutes. Investors who were eager to throw money at the new coins, blindly hoping they would land on the next Bitcoin or Ethereum. With all this money flying around, it's no small wonder that bankers in New York, Hong Kong, and London are abandoning 7-figure salaries to try their luck in the nascent ICO industry, according to Bloomberg. Bloomberg's covering this stuff. You could bet your sweet butt. You can't have movement like this going on in the financial world without some of the big players paying attention, including some of the, quote unquote mainstream media. Stories like this have become commonplace with every passing fintech trend as bankers, fearing the technology's potential to disrupt the banking business and threaten their bonus pool, hoping to cash in on the next technology-enabled revolution. And if you look at this little chart I want to show you, look at the ICOs here. June is when they went crazy, right? Remember that? And then July, second crazy. So is ICO mania over? I'm pretty sure I talked about this a little while back. Summertime ICO mania, it should slow back down. Doesn't mean the end of ICOs. It just means the mania should slow down. And it certainly looks like that. Now, of course, it would be nice if we saw one more month after July. We're not there yet, so we can't. But I suspect it's not going to look like, June over here, if I had to guess. Which is okay. I kind of feel like that stuff needs to settle down. Let's all let that stuff settle down, and then let's let the coins across the board basically start rising, to their rightful places higher. Richard Liu, a former deal maker at Renaissance China, left the world of finance for the told Bloomberg, what? He left the banking world behind for the chance to climb aboard a rocket ship. In reality, a $50 million hedge fund that's invested in 20 ICOs this year, including Tezos, one of the most successful ICOs in the industry's brief history. For Liu, who put together some of China's biggest tech deals in his old job, the chance to shape the nascent arena outweighs the dangers of a market crash or crackdown. Loosely akin to IPOs, ICOs have raised millions from investors hoping to get in early on the next Bitcoin or Ether, and their unchecked growth over the past year is such that they've drawn comparisons to the first ill-fated .com boom. Yet with stratospheric bonuses largely a thing of the past, the allure of an incandescent new arena, far from financial red tape, has proven irresistible to some. Traditional investment banks and VCs need to monitor this space closely. It could become very big, said the 30-year-old partner at $50 million hedge fund FBG Capital. Almost thought I said BFG, big effing something capital. No, it's FBG Capital, which has backed about 20 ICOs. He's off to a quick start, getting in on this year's largest sale, Tezos, a smart contract platform that raised $200 million, that is, to outstrip the average Hong Kong IPO size this year of around $31 million. Unlike the traditional financial sector, there are no ceilings or barriers. There's so much to imagine, he said. Later in the piece, Liu rebutted Bloomberg's concerns about parallels between the ICO frenzy and the run-up to the dot-com crash, arguing that trying to pick successful offerings presents an opportunity to carve out a niche. You want to be on a rocket ship, he said. If you join early, then every day you're making history. He's exactly right. What are we all trying to do? I want in on the pre-sale. Get me in on the pre-sale. You know, Salt token recently, $1.50 a piece. Pre-sale, whatever. Now all of a sudden they're $3. Bunch of people missed the boat on that. I barely caught it by the skin of my teeth. Thankfully, someone emailed me, hey, you know, there's very little left. You know, I didn't hear anything. Are you going to get in on that? Oh, crap. Let me look. Crap, he's right. Let me get in there. I meant to do it. I've just, you know, procrastinated a little bit. I'm just busy. You know, I've just got freaking done moving. But, anyways, the SEC's declaration that all ICOs should be treated like securities for regulatory purposes is a groundbreaking ruling that will help weed out some of the industry's bad actors by bringing a degree of oversight to the market. The rule change will likely slow the launch of new ICOs. So there's again, ICO mania, I think, is over. As serious companies figure out how to register their securities, while some of the frauds decide it's not worth the risk. Another trader who previously programmed trading algorithms at Bank of America plans to use an ICO to launch his own crypto asset management firm. In an interview with Bloomberg, he described the ICO market in stereotypically lofty terms. Justin Short, who created electronic trading algorithms for Bank of America Corp. Before launching trading-related startups, Newis is preparing to launch his own sale of digital tokens to bankroll what he calls crypto asset portfolio management. A former Wall Street floor trader, he likens the advent of ICOs to an episode 500 million years ago when many of the planet's life forms came into existence. It's a Cambrian explosion of ideas. But that means you have to put in your work to figure out which one is even likely to work. Ron Chernesky, the owner of electronic trading platform InvestFeed and a former trader, is so optimistic about ICOs that he's using one to swap out equity trading capabilities on his platform with cryptocurrency. Listen to me very closely, people. I understand that there's a few of these ICOs we're all in, I'm into, that are kind of just sitting there. Oh, they didn't really go up. Oh, man. And some of you guys, oh, I'm tapped out. I don't have any more to play with. So if a good ICO comes out, I might have to sell off the old one, and I might have to sell off at a slight loss. I understand. Guess what? I would have to do the same if I chose to sell off on one that's a little lower than it came out on. For example, Pillar, 10 cents. You can find them on Ether Delta now for 7-8 cents. I understand. Guess what? I got in at 10 cents. I'm one of those people. Right? It is what it is. And you got to understand something. Like they're saying here, these are like companies coming out for an IPO, another company IPO. Do you really think that every single ICO coin coming out, token, whatever, is going to be a winner? They're just going to take off like Veritasium, and I made 70 times, 20, 30 times my money in 3 weeks. Oh my God. Holy crap, Ripple was 2 and 3 cents. It went up to 39 cents. Oh my God. There's going to be some of those. And there's going to be some that don't do so well. Pay token. It's inched up a little bit higher than normal. 80 cents, I think, was the cost we all got in at, right? Looked earlier, it was like $1.20, I think. Somewhere around there. Guys, they just got released. Would you expect the stock market that every time a new stock comes out, it's just going to go and go and go and everyone wins the whole entire time? No. The interesting thing about these tokens is that so many of them have come out and everyone has won. But now we have some out there where nobody's winning, at least yet. We also were warned. I know I came out numerous times reading some of what Cliff said in his reports, his robot reports. Guys, the summer, which we're in now, of course, June, July, August, when summer gets here, get ready for scams and frauds and everything else. It's going to happen, which means what? You're not going to get a payday. You might be in on one that sucks. You might be in on one that's a fraud. But if you're in 1, 2, 3, 4, 5, 6, 7 of them, and you got your portfolio spread out, isn't that kind of the name of the game? And I believe me, I understand there's people out there that want to pull a single move. Man, I want a Veritasium to come out again. I only got 20 Ethereum, but that's all I've got. And when it hits, oh, I want to pounce. Do you know how lucky you have to be to nail another one of those? I don't claim that when I got on Veritasium that I knew in advance it was going to explode to epic levels that'll be mind-blowing. I didn't know that. Was I lucky? You bet your sweet butt. Populous token. Boy, I wanted to put more into that one. I got lucky through a guy that said, hey, we'll pull ours together so we can get the discount. You want in on 5? I'll take 5. Boy, again, shoulda, woulda, coulda. Wish I got more on that. But what about Populous? What about Pay? Pay's not doing great, but I'm not worried. You're going to hear new announcements. Oh, we're shipping our credit cards to this place and this, that does the swap or whatever. The pay cards. Oh, the price goes up. Oh, Pillar token. They've made a deal with Civic Coin. That's one he talks about a lot. Civic Coin and this one, and they're going to use the Pillar platform to. Oh my gosh! Guess what's going to happen to Pillar? It's going to go up. It's just like any news story that comes out. Oh, GE made a deal with so and so. Oh, GE stock's up 20% today. It's the same stuff. You just got to wait. And some of you, I should say, really, to be fair. Because I do have something to play with is why I'm going to say this. But some of you don't have enough anymore Ethereum and whatever to play with. You got this one, that one, I'm into 3, and that's all I got right now. You got to wait. I understand. But as Ethereum goes up and everything goes up, even, for example, even if you're in on Pillar, and it cost you 7 cents or whatever, it's still the same math of how many Ethereum do I get back for X or for, let's say one Pillar token, let's say it's Pillar in this example. And let's, again, we say we bought in at 10 cents. It's now 7 cents, let's say. However, that was when Ethereum was $200. Now Ethereum is $400. That math of how many of these tokens do I have, they're not going to stay at 7 cents because you're going to do the same math to say, how many Ethereum do I get back for this one? I used to get what is the equivalent of 7 cents, but now that Ethereum is $400, hey, I'm going to get double that. I'm going to get 14 cents. Now, granted, you got in at 10, but 10 cents to 14 cents is almost, if it was 15 cents, would be 50% gain. So you're still going to make money ultimately if that scenario plays out, and I don't see a reason why it won't when we watch Ethereum and everything going up all the time. That's why I always come out here and say, guys, it's almost like you can't lose. The worst case scenario, I've said this numerous times, is like you just wait. Just wait a little while. And here I am reading you, this guy used to be a trader, this one was taking a multi-million-dollar salary. They're leaving. We see the light. We're not going to sit back and do nothing. These traders, these companies that are normally Wall Streeters or stock market people, we want in on some of that damn ICO action. Do you think this stuff's going away now? Do you think the cryptos are just going to crash and burn and we'll never use them again? It's over. The party's over. Do you think that? You got some big boys coming in here. Now, these aren't huge guys, but these are guys making big salaries. These are notable guys. This guy pulled in $200 million for his whatever hedge fund thing he was dealing with. And there's more to the story. Former HSBC Forex trading architect Hugh Madden, currently Chief Technology Officer of Hong Kong-based ANX International, this month helped raise about $18.7 million for cryptocurrency exchange OAX. He likens ICO token ownership to a football club membership. You don't get special access, but as the team gets better, more people become fans, and the price goes up. When a football club builds more relationships with other clubs, gets more matches, and generally enjoys wider adoption, then more people want to be a part of it, the 40-year-old said. There is no limitation to participants, but there is a limited limit to memberships that allows members to exert influence on the future direction of the club. Of course, as Bloomberg readily admits, valuing ICOs is an impossible task. Developers regularly stumble upon coding flaws and even some legitimate ICOs. Meanwhile, hackers have stolen tens of millions of dollars of investors' money. Still, these flaws haven't stopped the market from eclipsing the value of early-stage venture capital funding raised so far this year, as starry-eyed investors inspired by the newly minted legions of Bitcoin millionaires gamble in the hopes of landing a 1,000 times return. 1,000 times? That's a 10 times return. That ain't enough. That's not enough, baby. We need to go higher. I was just about to say something too. Let me reread what I was reading again and see if it comes back to me. You know how my brain works. Of course, as Bloomberg readily admits, valuing ICOs is an impossible task. Developers regularly stumble upon coding flaws in... Oh, I got it. Isn't that funny? So, yes, some stuff has been stolen. We've heard the stories. The good guy hackers hacked back $200 million back to people's wallets. Wasn't that a beautiful story I told you the other day? It was awesome. I want you to go back to 1996, 97, 98, 2000. And if you put up a web page and you stuffed it with a bunch of keywords of whatever it was, like let's say you're selling air conditioners, window units, like I just got installed recently. Which, by the way, take a look at that baby. Look at that baby. I don't know what that is. That's like, oh, you see this? It looks like water through the window. That's the reflection of my green screen on the wall behind me. I installed that baby a little earlier. Let me tell you something. That was way better than that puppy right there. Where is it? That puppy. Way better. Let me tell you something. And I've got a couple little things I need to finish that with. But you could stuff keywords, and all of a sudden your page went to the top of search results. So if you're looking for window AC units, old JSNIP4's page shows up at the top. Why? Because it's stuffed full of keywords. And then the internet companies got wise to that trick. Oh, we can't have our results showing up, or people's website results showing up by keyword stuffer. So we need to find a way to programmatically, code to find that stuff. And then when we find it, we penalize them. Not only are you going down in the rankings, you're going way back where no one's ever going to find you because you're using black hat SEO, search engine optimization, SEO. And then people found ways of using Google's PageRank tool. Well, if I have a bunch of people linking to me, and I can hire people to have, big web farms to do so, of course, I'll have them link to me, and I'll get pushed back to the top because I got a bunch of sites linking to me. Google got wise of that. We got a way around that, right? So why I'm sharing that with you is because that was the beginning of the internet, so to speak, right? Mid 90s, if you want to call it that. Really, I know it was out earlier than that, but high-speed internet. Well, I don't even know if it was out in 1995. Like, I think I remember of 1998 or 99 or something before I may have had high speed. I don't remember, though. But point is, yeah, there was issues, there was bugs, not even bugs, there was flaws where the people could rig the system by stuffing keywords, all that stuff, right? And then they fixed it, and now we have a much better, internet search results, etc. You don't find junky garbage websites in the first page of Google anymore. Not happening. So this is the same thing. Yeah, there's going to be some problems. You're going to hear some horror stories, but this is ground level. This is early on. It'll get better. Like I said, you're going to find people hacking and stealing coins, and then you're going to find out, oh, they were phished. That address has now been locked out. We've built into, say, for example, the Ethereum core code to give us as in, let's say, the Ethereum developers, access to issue a refund because we recognize that's a phishing attempt and they're a hacker. Wipe your hands clean. Done. That's going to come. I can feel it. I have not heard from anybody about this, but this has to be something if this is going to go forward in the world, clearly. So anyways, just want to share that with you. Some of the big players are getting in, and you and I beat them to it. You and I got in before the big guys got in. And again, if your ICO or whatever is not performing well, just hold off. At the same time, if another one comes up and you're like, oh my God, that's one I have to get in. I've got to get into that one. If that happens, or that's where you're at, and you got to unload your other one, you got to do what you got to do. But that's your decision, not mine. Why? Because old JSNIP4 doesn't give quote unquote financial advice. It may seem like it at times, but number one, don't you got to get paid by people to give them advice? As far as it to be considered financial advice, and I have my disclaimers, etc., on my YouTube about page. I have them on my videos, etc. Just to make that clear, because every now and then I'll see someone saying that you need to, no, I don't. I'm fine. I don't give financial advice. Take care.